Betterment recently announcing a deal to acquire the digital accounts of Marcus Invest. Goldman Sachs launched Marcus Invest in February of 2021, targeting retail investors, but shifted its strategy and will no longer offer these services. So joining us now in her first interview since announcing the Marcus deal, Betterment CEO Sarah Levy. Sarah, it's great to have you back on the show. Walk me through the details, what this brings to the table for Betterment, how it grows your business.
Absolutely. Well, thanks for having me, as always, Morgan. Pleasure to be here. So Marcus is really, this transaction for us is really about the customers first. And when you think about this group of mass affluent customers that Marcus had attracted, it really became no longer the target segment for Goldman Sachs because they're more of an upmarket, higher net worth target. For us, it was squarely in the sweet spot of who we serve. And so really, first and foremost, what Goldman was looking for was a trusted brand and platform that could deliver for this customer segment on the promise that they really came to Marcus for originally, which is diversified long-term investing advice, ease of use, mobile first. And this really was our sweet spot. So we were excited to welcome them. We are excited to welcome these customers, to bring them the great advice that we bring to our other 850,000 customers.
So we've seen Goldman, as well as a number of other big banks and financial firms, basically try to build out their own, digital forward investing platforms, only to then leave them or exit them, or in the case of Goldman, sell it or hand it over to you. Why can you succeed where they can't?
I think there are two reasons. The first is this is a scale business, and I think you got to be in it for the long haul because you need to achieve a certain amount of scale to keep prices as low as we do in order for this to be viable economically. And I think there are going to be the haves and the have-nots who haven't been able to achieve that scale. So first, I would say we got there early, we got there first, and we're one of very few who have now achieved the scale to be able to continue to innovate for that customer and at the same time deliver, the low costs that they come to expect. And I think the second is a technology company, is hard to build, is hard to sustain. It's hard to motivate engineers, to continue to deliver excellence. And that's just a more difficult thing to do as part of a larger institution like Goldman.
Okay. So now you have a couple different businesses, but I'm going to focus on this individual investor business, the retail investing business. What are you seeing in terms of trends and behaviors on the platform?
So we see pretty consistent behavior in almost in all market conditions, which is people who join us really have more of a set it and forget it mentality. And so they come, they set up a plan, and then they put money to work on sort of a consistent basis, dollar cost averaging. The major difference that we see when rates rise and fall is really where they're putting that investment. So right now, we continue to see a lot more flows into high yield cash than we do into taxable investing. And then there's the obvious seasonality, like in March and April, you see people topping up their IRAs as the deadlines approach. And then on the other side of that, they go back to investing in taxable investing accounts.
Yeah. And of course, you're forward facing with retirement. You've got a 401k as well. You're working with small and medium businesses largely on some of those programs. I guess walk me through the competitive landscape, because we are seeing Robinhood and some of the other newer, fintech players increasingly move into this space too. So what is it taking to acquire customers and to keep them?
So when I think about our aspiration, I believe that we are going to become the definitive wealth brand for the millennial and Gen Z generations. So when I think about some of the large institutions who serve, my parents and my grandparents incredibly well, I think this new generation is really looking for, a step up in terms of technology and mobile first in ways that the prior generation wasn't. And so I think that's really the space we're all fighting for, where Betterment strategy is different, as you mentioned, is our B2B strategy. I really look at this as a single technology stack that powers really what I think of as three legs of the stool: a retail business, an advisor solutions business, and a workplace solution, which is the 401k. And there's an incredible connectivity for us in those three businesses, whether it's at the end user who can move seamlessly from a retirement account to a taxable account, or whether that's through the technology stack where you build something once and then it services multiple audiences. And so for me, that's really what sets us apart. I think some of the other competitors are either targeting a more advanced trader, which is not our crowd, or targeting solely advisors. And I think that has its limitations because we have the scale and the ability to really build once and keep costs low for all three segments.